And I am doing the recording, so if the recording's kind of splotchy, I apologize, because there are some things that I might have to take my attention to while the market's open here. Okie dokie. So we're going to start over here with the 15-minute chart. And I'm actually going to move this back. We're just going to go over like 10 days. Those of you that want to do more day trading, you might want to take some notes here during this, because we're going to talk about some things that I think will be quite helpful for you. Actually, let's see how far I can go back and still do it 15. I want to zoom this in. Okie dokie. There's really three good ways that I know of for day trading, or even just like shorter term trading Apple. So what I'm going to do is I'm just going to pull up to a time. Let's go here. The first thing is everybody wants to buy a stock when it's already moved a lot. I don't know why, but any type of venue I've ever been at before, people are most interested in buying not when a stock looks bad, but when it looks good and really good. And the people that are buying at the right time, they love those people, simply because they're probably selling to them. A few things you see on my chart here right away. What's this? I need to change one other thing. What's that yellow line? Yeah, what moving average? 8 SMA. The 8 SMA on every chart you ever see of mine will be yellow. It'll be the only yellow line on any chart I ever use. So the 8 SMA, it's obviously based on closing price of prior 8 candles. And it's really good for helping you establish just a short-term direction. Now, one thing I'll tell you about the 8 SMA, trades that you do using the 8 SMA will kind of result two different ways. The first way is you'll either break even / lose just a little bit / make just a wee little bit, or it'll have you in for all of the big moves. So if you think about it, if you're using it to try to detect big moves and you trade every opportunity it gives you, there's a chance that on several trades you might basically average breaking even. But it's not a bad thing to stick with, because for the big moves, it'll have you in. When you talk about trading a moving average, how do you trade the moving average? How do we trade a moving average? No, moving averages move. I can show you millions of charts where somebody say, oh, the 20 simple moving average, that's my support point. And I bet you at least went 1 penny below it. And if you were one trying to stick at it, you bought it right at it, goes 1 penny below it, you stop out, and then it bounces. It's a direction, curling up or curling down. Simply wait on that direction. And for one like Apple, and actually several others I've kind of been studying for quite a while, actually all 6 of those 50/50 charts that I put on that one block screen for my normal desktop sharing, those will all work good with this same little set of rules, which would be, if you're going to trade on your 8 SMA, you can go 4 strikes out of the money for the following week's expiration. So this week's expiration is July 13th, or sorry, February 13th, my bad. I wish it was July. What would next week's expiration be? If we're going to trade the 8 SMA this week, what would we be trading? Yeah, the February 20th. Now, sometimes you'll find that if that following week's expiration is a monthly, you might not have the same strikes that you have on your average weekly. You know, for example, sometimes Facebook right now has 50-cent increments on the weeklies, and some of the monthlies have like $2.50 increments. So if you're in that situation, you need to look at your normal increments on your weekly, and even if you have to go to the following week, which would be the monthly, you wouldn't be buying Facebook calls that are, you know, 4 strikes out at $2.50 increments. You're not going to buy $10 out of the money. You know, for the average stock, anywhere from $2 to $4 is the rule that you would use for this. And plain and simple, you're going to trade it in conjunction with the moving average. Now, if you approach your stock and you say, okay, I want to start trading this, understand that your best time to start trading a stock isn't just right now. Even though there could be some gains being made, your best time to start anything is going to be after it's already run up and makes a bearish pattern to fall, or after it's already fallen, basically when it's going to start or looking to start a new swing in general. Okay, so something to keep in mind there as well. Now, if you get to the point where you're looking at, okay, you know what, I missed this Apple trade here, where would I be looking to pull back to? You know, let's just assume this is the first time you're looking at the Apple chart and you're going to use this. The other thing that I use and I like to use would be the 50-50 system. You know, if I was using the 50-50 system back here, I would have a green line here. Let me start from the bottom. I have a red line. Green line here. And one thing that I've found in general too with the 50-50 system, people that are struggling with the 50-50 system are typically seeing higher highs, higher lows, but trying to call the top on it. And instead of buying calls every time it crosses a line, they're trying to buy puts on every red candle. The way the 50-50 system will be effective is when you can stack multiple trades in a direction. Okay, that's going to be the most important thing for you. And actually, we'll just put one up here. We'll just start it from here. Now, the 50-50 system, if you're using a 15-minute chart, we know that you're using what? Options. Current week, right? Until Friday, and then you go to the next week. And the first out of the money strike. Okay, so, you know, right over here, your first out of the money puts would be the 110s. Is there any reason right here to think we should take a puts play? No, because, you know, we went up to a swing high. Now, if you had your chart doctored up from before, you might have had this red line right here. That was a swing low point. Now, is there any reason to think you might take a puts play? Even though it hit a red line and pulled back from it? Yeah. You know, that would have, if I missed that entire run, every time it's going up and up and up, I'm not trying to take puts on every red candle. This one, yeah. You know, and right here you could say, well, you know, what about this swing low that was right here? You broke it before the red candle. When you close back above a swing low, there's no reason to use it. You got to delete it. Everybody still with me? So in this particular case right here, we could have taken a 50-50 trade on 110 puts. And we're talking about this being the area where we would start a new trading system, like if we approach the chart and said, dang, look at that thing run, I want to start trading Apple. The other thing we can do is try to figure out where it could come down to. Good tool for that would be your Fibonacci extensions. And one thing you want to do with your Fibonacci extensions, if you're going to use it in this way, use that 23.6 line, the 0.236. The reason I say that is most stocks will typically consolidate between the 0 and the 0.236 line. So in that case, you would want to wait till it crosses below it. Like, hey, I think, man, this is going to pull back. I crossed below the 0.236. It could come down to 109.57. What puts play would I maybe buy for this? With a 109.57 target. Still the 110 puts. Something that would go in the money if the target was hit, right? Now, the other thing to understand too is the 50-50 trade, you don't have to really watch that one, do you? You buy it, you enter the 2 sell orders, and it's done. So let's just say you bought those 110 puts at $1 for a 50-50 trade, and you bought 10 of them. You would enter a sell order for 5 with a good till canceled trailing stop at 50 cents. The other 5, you would enter a good till canceled limit order, good till canceled limit order at $1.50. That's the 50-50 system. A 50% loss trail stop, a 50% gain limit. And now if I also turned around and entered the second trade for the Fibonacci extension, what are the 2 most important points here that I have to watch? The 2 most important points that I'd want to be watching here. Well, the 23 just to get me in, but the 0, if I bought puts, if it crossed above the 0 line, my target's no longer good, is it? Which, if I was just in a day trade, I would do what if it crossed above that line? I'd stop out of the day trade. Now, you don't have to use this exact to the penny, but one thing I like to do with using this is if it even gets like close to that number, that's 109.56. Let's say it got to like 109.80. And I was looking at it. Well, you know what? Chances are I'm just going to put like a 10-cent trailing stop on it. Let it take care of itself at that point and move on. As the candles progress, you notice right here, your 8 SMA curled down, right? Your 8 SMA curled down right here. And as the first candle that closed when it curled down, all you got to do is wait for the next candle to open. And if it kept going red, you're going to buy another one. Now, this one you would buy the following week, 4 strikes out of the money. So, 110 put would be the first one, 109, 108, 107. How many trades would you actually be in at this time? And I'm talking about the open of this candle. You'd be in 3. Now, the funny thing is when this wick was made, it would have actually hit your 50% limit sell from your 50-50 trade. And you would have also entered your 10-cent trailing stop from your Fibonacci trade, right? Wouldn't you say that wick came pretty close to that line? One, we're integrating 3 different trading systems. That's why 3. So our 50-50 trade, we would have hit our 50% limit. On that wick, we might have even hit our trailing stop. I don't know. But we would have at least guaranteed the 50-50 trade to be a winner. Our fib trade, I'm positive that you'd have set your 10-cent trailing stop, and during that wick, you'd have got stopped out. But then you'd have next week's 107 puts. Now let's go over here to where this starts to look like it could turn around. And I'm going to run another set of Fibonacci's. Now, just because this is making a green candle here, would that be another buy on the 50-50 system? No. If we were going to buy calls, it's got to do something in relation to a green line, right? Something has to happen in relation to a green line. There's a green line. You see our 23.6 for this particular fib set is all the way up here, about 110.70. Because there's quite the range here that was made. And therefore, we want to make sure it's not just going to consolidate. Well, when you turn around here, you actually see that you dropped below the 0 line. That makes it simple. If you drop below the 0 line, you have to sell, or you not sell, but delete. We didn't buy that other calls trade. You'd had to delete it. But now look at it. Wow, this thing is like literally to the penny right on this Fibonacci target. Don't try to buy the low, because sometimes this will happen. Now, at this point in time, how many trades are you in? At best, 1.5. You'd be in your 8 moving average trade, and you might still have half of your 50-50 if the trailing stop didn't hit, but you would have already hit your 50% limit. So now as stuff starts kind of shaking around, hey, this almost looks like, yeah, it dipped below my target point, but that it could start to go up. Really, really simple. We're going to use this low. Oops, let me go to, actually, I want to put a swing low point because we do have a visible up move. And then with the Fibonacci extensions, I'm going to mark this low, this high, and this low. And the target right now is like way up there. 113.77. But I wouldn't be buying this until it crossed above 110.29. Are we getting a visible down move now? On my chart, are we getting a visible down move? We went up. Now we've started going down. Okay, well then we would put a green line at this high point. What would we do here on the close of this candle? Remember, the close is the bottom of the red body. Yeah, we would enter right here 111 calls for a 50-50 trade. Now, you also see your 8 SMA started to curl up. So you're going to watch the next candle from the open to see if it goes up, which, well, from the open, you had an ugly wick, but hey, it started going up. What would you do here with your 8 SMA trade? And if you remember, you would have bought it right here. So you're basically coming really close to breaking even. And like I said, with the 8 SMA, you're either going to be like really close to breaking even a lot, but it'll get you in all the big moves if you trade it. If you don't trust it and you do something else, well, then it might hurt you a little bit because you'll probably buy it halfway up the 8 SMA and then not know what to do with it. So anyway, here you would have bought the 50-50s. But here's a little bit something different to look at. First off, that 113.77 fib that's like way up there, we just crossed the 23.6 line. So we would actually buy the 113 calls for that. We're also curling up on the 8 SMA on this candle's close here. So you know what? We'd have been in 111, 12, 13, 114. Yeah, 114 calls for the following week. But we also have something else to look at here. We had a visible move, didn't we? A low, a high, and a low, which would have actually had us buy in here on 111 calls. So we would have 2 Fibonacci trades going on right now, one 50-50 trade, and another 8 SMA trade. What are we doing here besides deleting this red line? We're doing 2 things. We're going to buy another 50-50 calls trade, right? 112 calls. But look what it just hit right here. So we'd put a 10-cent trailing stop on those 111 calls, right? No, and I didn't say that at all. See, you're trying to overthink it. If it starts curling up, you would buy calls. If it's curling down, you would sell the calls, buy puts. So here we would put a 10-cent trailing stop on those 111 calls. Is it safe to assume that this would be a profiting trade? Now also too, you'd have hit your 50-cent limit on this buy right here, your 50% limit up in here. You'd have got your 50% limit. Now, if it hit one of your fib targets, and let's say it made a red candle, what would you be looking to do? Because your stop, your 10-cent trailing stop would have went off there. It hit right at the target. Well, we would take high, low, high, and it might be a little hard to follow on the chart, but I'm going to try to make the lines red. And you would actually take the 111 puts because this line right here is at 110.02. So the 110 puts wouldn't go in the money. Now, at this point in time, it hasn't gone below the line, the 23.6. So we never would have bought. What would we do here? Yeah, I'm looking at something real quick. Right here, when it didn't close the candle below our 23.6 line, didn't even go below it, we wouldn't have bought puts. And here you can see, well, shoot, it ran up above. We got to delete our fibs. How many trades are we in at this point? How many trades are we in right here at this point? Our 8 SMA trade, we'd be in half of one 50-50 trade, maybe half or at least a full 50-50 trade from this break, and then that larger fib target to the 113.77. 4 different trades that we'd at least have the half position in that you'd be in here. As it continues up, is there any reason to buy other stuff right here? Any reason? No. We would still just be in the same trades we were already in. If it started to at any time look like it could fall, we'd go back to our fib extensions. We would run the high that we used before, the low that we used before, and to another high. Now, did this one break below the 23.6 line? Yes, it did. 23.6 line right there at 111.38. And it give you a target of 110.37. What puts would we buy? Anybody? 110.37 target. We'd buy the 111s. Because the 110s wouldn't go in the money at our target area. We want something that has a chance to go in the money. And it's just because, you know, most of the time with options, when they go in the money, you get that little pop in price. So here, we would have had our 8 SMA calls trade. our fib target trade up to 113.77, we probably would have gotten stopped out of the two 50-50s with a nice win. So we'd have the two other trades. We also have a visible pullback, which means we want to take and put a green line up on this close. We'd have two calls trades, one puts trade. Right here, it actually hits right at your zero line, but it doesn't break it, but it closes above your swing point. What would you need to do? You need to buy a 50-50 trade for calls. And you now have three calls trades, one puts trade. And you'd want to put a red line right here because now you got a visible up move. And so far here, you wouldn't be doing anything. Here you wouldn't do anything. Still nothing. Here you would do something. What would you do here? Two things. Actually, three things. Well, on this candle too, the open of the next, potentially another thing. And what would we do? We would sell our 8 SMA trade, wouldn't we? 8 SMA curled down. I don't need to see anything else. We would have bought it here, trading a full week out, and later the same day, we could have sold it at a $1.24 gain from where we bought it. That'd have been profit, right? What else would we do on the close of this candle? A 50-50 puts trade, right? Now, chances are your calls that you entered here are probably really close to the 50% trail stop. You wouldn't enter the 8 SMA trade unless the next candle opened and continued downwards, which it did not do. So you wouldn't have entered the 8 SMA trade. Because the candle closed above that red line, you would actually take it off and put a new line here. Your 8 SMA is still going down. So if the open of the next candle is red, you'd enter your 8 SMA trade. Is it red? No. No. And what would you do here? Two things. Another 50-50 calls trade. We'd stop out of the puts trade, right? The Fibonacci puts trade we had. And then how about running some Fibonacci extensions from this low? Your high was here. And to this low, which you find that candle also was your breakout candle. And now you have a 113.06 target. So you could actually, again, buy more 113 calls. You'd have bought here for your 50-50 trade 112 calls. What you would not do is buy the 8 SMA trade yet. The reason you wouldn't buy the 8 SMA trade yet, oops, let me make this chart a little different, is on this candle, the 8 SMA was flat. This is the first candle it's going up. Now, what would you do? You don't have to wait on this candle to close, though. It's the direction from the open of the candle. So at this point in time, how many actual trades would you be in? One for the 8 SMA, 2 different fibs, so that's 3. You would have stopped out of the 50-50 trade you took on this candle, but guess what? You'd still have the other half. So there's 3.5. You got another 50-50 trade you just entered, so there's 4.5. And then sadly, your puts, you would have stopped out, but you'd still have the half of the share or the contracts, right? So you're about 5 even positions right now. No reason here to be buying puts. Still no reason to buy puts, but do we have a visible down move? And by the way, on that move, your 50-50 trade. Oops, hold on a second. On that move, your 50-50 trade would have hit your limit. Oops, I'm on the wrong drawing. It would have hit your limit and would have also stopped you out with your trail stop here. What's funny is at this point in time, you'd be saying, man, that other 50-50 trade I had, the puts that I got stopped out of, hey, the limit might come back. But would you actually be doing anything? Would you be buying anything here? Nope. As a matter of fact, even your 8 SMA trade, it's still pointing up. For the 8 SMA one, for the Fibonacci, you can do current week. But I usually switch like for Fibonacci's, I'll switch it about Wednesday to next week. But right here, what are we doing? Another 50-50 calls trade. How about right here? All we're going to do is delete this line. Now, even though this candle was a really big candle, had it even been a wee little candle, you could have bought calls because it would have been a positive move from this green line here. And because we would have used it as such, we're going to take that off and we're going to put a red line on the swing low, because that's the other thing we want to do is we always want to keep our charts ready to build our trades for the next go round. The other thing you could have done too, by the way, is run another set of fibs and entered that, but you'd already been past your 50% line by the close of the candle. What are we doing here? Absolutely nothing. What about here? Another 50-50 calls trade. What else? On this candle, your 8 SMA went from flat to up. This candle give you continuation. which would actually, if you're keeping track, would have you in 6 trades at this point in time. Now, remember what I said about if it even gets close to a line? I know it's kind of darked out and might be a little hard to see. I'm just going to go to it. If it even gets close to one of your lines and looks like it could go the other direction, what are you going to do? You're right here. You're 16 cents. That's pretty close when you're talking about a $112 stock at this point in time. 10-cent trailing stop on your fibs, right? You bought them clear down here, right here. 10-cent trailing stop. As it pulled back, yep, you know what? You'll get stopped out. It's okay, because it would have been a winner. Now, the other thing is if you're looking for, hey, could it pull back? You'll often hear me say that options are a game of what size moves. $1 moves. And by the time you cross that 23.6 line, you only had 90 cents to this downside play. Are you even going to make that trade? If it's a game of $1 moves, we should be looking for a move that could be how big? $1, right? So you could leave this on your chart just as a, hey, I'll see where it pulls back. But I wouldn't personally want to make this trade. What I would be doing here, we broke above this swing point, but then closed the candle below it. So we'd have to delete that green line. We'd put another green line right here. And what would we do here? Besides delete these fibs that it just broke above. We'd say, dang, I wish I didn't set the 10-cent trailing stop there because this one actually hit my target price. But besides that, all we would do now is put a red line right here. We'd have a 50-50 trade, wouldn't we? Come on. People tell me all the time, I just want to day trade. I want quick money, but they don't want to learn how to do it. And they don't realize that all you're going to do is try to follow day trading. You're going to be broke quick. It's too dangerous for you to follow others' trades for day trading. So right here's a new 50-50 entry. Now, just because your 8 SMA is moving up, does that mean it would be another 8 SMA buy? No. You either get the SMA at the time where it starts the curl or you missed it. Plus, if you think about it right now, you're in 2 different 8 SMA trades. Both are looking pretty good. What am I going to do here? No, Juan. If you would actually listen to what I'm saying, you wait till it hits your target and you put your trailing stop on it. See right here, man, that's pretty close, right? 10-cent trailing stop. you would have stopped out, wouldn't you? This trade would be over. Now, do you notice that this Fibonacci set, the target that was just hit, came from using this low, this high, and this low, right? Everybody sees that? Or am I the only one? That's what I don't like about the intraday discussions, because nobody listens, because they still don't listen to the fact that right now is not the time to really be worrying about buying stuff. And they ignore everything else just to do whatever. So if we're going to use another set, first we want to, oops, let me make sure I'm on the right drawing selection. Put a green line right here. And by the way, our 50-50 trade would have hit the 50% limit sell there. And you notice, see, here's where people mess up on the 50-50 system. Oh, I got to try to call the top, or I got to try to call the bottom. So all the way through it, they're trying to buy like puts on any red candle, even when it's not justified. You don't buy puts unless it fails a red line or goes up to a red line and pulls back. It's the only time you would ever buy puts. You don't try to buy puts just because it's a red candle. Because when you do it correctly, just in this little group right here, you'd had 1 calls trade, 2 calls trades. When it crossed over here, 3 calls trades, 4 and 5 calls trades, all winners, right? But those winners would have been wiped out if you were trying to buy puts on every red candle. And that's where, you know, people that are struggling with it, that's why they're struggling with it. Believe me, I've reviewed some trades and that's what I've seen. So now, because we hit our target here, I'm going to get rid of this. I want to see if it's going to pull back what it could pull back to. $111.90, and it closed below my 23.6 line. I've still got at least a portion of probably 3 of the 5 50-50 trades, and I've got 2 8 SMA trades. I'm not scared about buying 1 puts trade, but I'd buy the 112 puts. What do I do here? This candle, the 8 SMA, started curling down, and this is a red candle. What am I going to do? I am going to sell my 2 8 SMA calls trades, but why would I kind of break my rule that says this might be the candle to buy on and say we have to wait for the next candle? What that I teach consistently would tell us that. It has nothing to do with the swing point. It has to do with the candle. It has to do with the actual candle. It's a doji candle. What does a doji candle say? It doesn't say you're going to reverse, but it says watch what? Watch my next candle. So I would still, I mean, I'm going to be up nice on these 2 8 SMA trades. Been in them for one of them for 3 days. This is the 3rd day. The other one, it's only the 2nd day. Yeah, let's go ahead and sell them. Make some profit there. When I watch my next candle, that one kind of looks like a doji too, doesn't it? I didn't really get a definitive movement. We're watching for a movement after it's curled, right? Any definitive movement? What do I do here? Well, I would have a new target for my puts, wouldn't I? No, I opened above it and closed below it. I don't delete the swing high. And even though in this particular case, I wouldn't say stop out of those puts right away, you have to understand you've got a different target. And if that next candle even makes an inkling of green, then you stop out of those puts. But what else do you have to do here? Or else you're not trading systematically. You have to do it. You don't have a choice. What do you have to do? There was no target. The target was clear down here. Is this a positive move after retesting a swing high? So what do? You hit a green line, you made a positive move, and your candle closed. 50-50 trade on calls, right? Now, the next thing you would want to do, because you've now already tested off of this line, you'd want to get rid of that one and go here and mark you a swing low. What do you do here? Another 50-50 trade on calls. The other thing you would want to do is say, oh, hold on a second. Yeah, I made a down move, visible down move there, visible up move to here, and I got a low right here. Man, that's going up from my 23.6 line. I know I had to stop out of those other fib puts trade, but I'm going to take some 114 calls. Now, on this candle too, the 8 SMA just started curling up. So am I buying? Am I buying here? Not for the 8 SMA trade. This is the first candle it curled up. I need continuation on the next. Now, you could actually say that from the open of the candle, it gave you continuation. And during that candle, I probably would have bought. Do I have a visible pullback? Visible pullback here? We're missing a line. We would have a line right here too, but it closed right at it. Right here, we're still not doing anything. All we did was curl sideways. on our 8 SMA. Now, this line would go away, right? This green one? Because we closed the candle below it. Hey, well, we've got a green candle off of a red line. Are we going to buy more calls with the 50-50 trade? No. Why not? We got a green candle off of a red line. We would only buy calls if it did something to a green line, right? It would have to do something from a green line, not a red line. Now here we're curling down, and there we got continuation. What happens to your 8 SMA trade that you bought right here? This is one of those cases where it's like it basically breaks you even, but it gets you in for all the good moves, doesn't it? So you would sell your 8 SMA trade, probably about even, maybe a little bit of a loss, maybe a little bit of a gain, but about even. And then the little booger starts to curl on you again right here. But you didn't get continuation. Actually, it didn't curl there. What are we doing here? What are we doing right here? A 50-50 puts trade. We are also taking the 8 SMA puts trade for the following week. What are we doing here? $50-50 puts trade. It closed below a red line. And then it came back up above it. That happens sometimes. You'd still be in this Fibonacci trade, by the way, because all it did was hit your 0 line. That one right now is kind of like your insurance, right? I got that calls trade, and now I'm starting to get puts trades because the system's telling me to do that. Oops, we'd have another green line right here, by the way. So you got to constantly work with your charts too, so you know what to do. What do you do here? You gap down the next day, but look at that. I mean, you went below 3 different lines. Chances are every one of your limits is going to hit. Chances are every one of your limits hit. And actually, the other thing we missed, I was not doing it. You would have had still using that same point here to here. You got stopped out of the 1 puts trade, but you would have re-entered a fib puts trade here. Now here you opened below your target. So you're putting a 10-cent trailing stop on it, right? Well, it kept going down, and then it makes this big wick. You just stopped out right about the time you bounced from this green line. Now we would also stop out of that Fibonacci trade, right? We would have done that right at the open. As soon as it opened and then, man, it's still going down. Bye-bye on that calls trade. Every one of our puts, our 50-50 puts, the 3 different ones we took, would have hit their limit, which makes this next 50-50 puts trade not as risky, right? Because you will have already made money. You will have already made money. What do you do here? What just happened? Look at this red line. Another 50-50 puts play. But you see this green line right here? What do you got to do if it makes a green candle? Exactly. Now, here's one thing to understand, too, about the 50-50 trading system. There's two really dangerous buys for your 50-50 system. The first one and the last one. You know when the first one is. Do you know when the last one's going to be? You know, I could say on average, you'll get 5 to 7 in any direction. But 2 weeks ago, we had 11 on CVX. Actually, that's 3 weeks ago now. So you have to keep doing it, because by the time the last one fails, and I promise you, your last one will actually be a loser. But do you really know if your last one's the second one or the 25th one or the 9th one or the 61st one? Do you know? Exactly, you don't. So you have to continue to trade the system over and over and over and over again. And by the time the last one does fail, will you care? Let's think about it. If you just had like 7 winners in a row, number 8 is a loser, crap. I wouldn't care. Here we're not doing anything. What are we doing here? It dropped below the green line. What are we doing? Anybody, anybody? We ain't doing crap. Except for deleting the green line, because it closed below it. What are we doing there? It just closed below another green line. And you could say, where's our fibs at? It didn't give us another up move to get another set of fibs. So we just had to keep our 8 SMA trade, right? We got an 8 SMA trade. We've got 4 different puts buys on the 50-50. And all we got to do is delete this green. Just made, oh my gosh, just made a green candle. That means I should buy calls, right? No. But that's what most people do. The ones that have sent me information on their account because they're struggling, they say, hey, that's a calls buy. Well, right now we're just talking about one of the 50-50 system. I'm talking about integrating the other ones. Like I said, with the 8 SMA, you'll have a lot of wishy-washy ones that are pretty much average you breaking even, but you'll get all the big moves. And the Fibonacci extensions on most charts for intraday moves are just as good as anything else. But remember a couple weeks ago, I told you I had a member that started integrating several trade systems on one chart, and I told you I was going to test it and get 1,000 trades before I taught anything about it. It's about three weeks ago now. Yeah, I've done 1,003 trades using this on Apple. Here, am I buying calls? Am I selling anything? What am I doing? I might have hit a trailing stop after hitting all my 50% limits. I'm still not doing anything here, am I? I would not put a swing point here because I don't have a visible down move. But my 8 SMA just curled up. What am I going to do? I'm going to use the direction of the next to sell my 8 SMA puts trade. I'm also going to take and look at this whole move right here. Got a low, a high, and a low. Oops. And I put it in the wrong spot. Try that again. A low, a high, and a low. And what did it just do? Crossed above my 23.6 line, and I could take 114 calls, right? Continuation on an upwards curling 8 SMA. Sell my puts. Buy the 8 SMA calls. The puts would have been a winner there. I'm already in the fib trade. I'd have to delete that one red line I had because we just crossed above it. And what I would do here, just so you know, even though I said I wouldn't buy a 50-50 on this break because that was just consolidation, at this point in time, I don't have any green lines for if this pulls back any. Got plenty of red lines. So this is where I would mark that as a green line. Because you know what? If it hit that and made a positive move up from it, I would buy calls. See, and right here, I still don't have a 50-50 trade. But here I do, right? Isn't that a 50-50 for puts? Hit a red line, pulled back from it. I'm still in my 8 SMA calls trade. I'm still in my calls trade for fibs. But I actually just bought a 50-50 on puts. And really, this would be the first one of an entirely new series. Do I know that that first one's going to be a winner? No, I don't. But I do know I need to put a green line right here. And I also know that if it makes a positive move off this green line here, I'm going to buy calls. What am I doing here? A 50-50 calls trade. The other thing I would do here, by the way, is I would now delete this line and I'd make it a red line because it's also a swing low point. Uh-oh, my 8 SMA just curled down on this candle. I got two things I need to look at. First off, the next candle, I might have to sell my 8 SMA calls play for about break even. But I also want to go from this top, oops, this top to this bottom to this top. And if I cross below 110.52, I want to buy. Now, because that says 107 even, sadly, I would go with 108 puts because I want them to be in the money, not at the money, at my target. Okay, so here, it's still curling down the 8 SMA, but the candle did not continue down, did it? So do we have to sell our 8 SMA calls trade? The answer is no, but we also wouldn't buy a puts trade either. Here we'd buy the puts trade. There we'd buy or sell the calls trade, because you don't have to wait for anything. You got continuation. The line was already going down. It didn't matter that this was a green candle. The 8 SMA was already going down. You'd about break even on that calls trade. You'd be in another puts trade. You would buy the Fib 108 puts trade, but you wouldn't stop out of that 114 calls trade yet. What else would you do? A lot of stuff going on that one candle. What would you do? Buy another 50-50 puts trade, right? What do you do here? Two things. You're going to buy a puts trade. You're also going to have to stop out of that Fibonacci trade. Your other two puts trades would have hit their limit on this candle. So you've only got one full 50-50 trade. And then you're pissed off. Why are you pissed off? Because you can't even see this candle. It gapped up so high. So what do you do there? Yep, you just got to take some calls and keep doing it from that point forward. So everybody following me on that very large demonstration of how we could use the 50-50 system integrated with the 8 SMA and the fibs as well. You go from a low to a high to a low. If you're looking for a puts target, it's a high to a high. You know, you just started out maybe with this one. And you know what? Right when it hit your line, you put a 10-cent trailing stop on, but then you would have turned around and had this one. And guess what? Cool. Boom, it gaps over, you put your 10-cent trailing stop on. Yes, it would have stopped you out there. That sucks. But the cool thing that you can also do is you can take all of this right here and do it using the 60-minute chart in just a slightly different way. What way do you think that would be? For the swing points, the 50-50 system, and for the Fibonacci's, you would do next week, so 2 weeks out, where on the 15-minute you would do the same week. And then for the 8 SMA, where you'd normally be 2 weeks out, how far out do you think you want to be? Four weeks. It's basically double. So if you integrate the two together, no, Juan, so you don't listen ever. For the 60, yes, you'd be 2 weeks out. For the 15, it's the current week. But between the two charts, just on one like Apple, it would not be uncommon for somebody to actually have between 30 and 40 trades at a time if their account was big enough to do it. Which means if you're going to apply all of those systems to it, how many charts are you going to apply those systems to? Just one. Just one. So let me close out my desktop sharing real quick.